what is happening with Avalanche, aka AVAX. We did a video not that long ago, I think it was last month, and we've got it pretty bang on, but we haven't had the follow through. So what does that mean, and what should we anticipate next? Well, that's what we're going to cover in today's video. So like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only is focused on currencies, but now exclusive on cryptocurrency. So let's dive straight in. All right, so we did a video on Avalanche on, when was it? This was on the 5th of March. Top 10 crypto avalanche to explode, best crypto strategy for now. By the way, if you like today's content, do hit the like button. It does make a difference. Subscribe, because we do daily content, and we're doing daily content for a full year now. But what we said with Avalanche was on the 5th of March, we said we should be anticipating this over here, this A, B, C to the downside, and then a follow through to the upside, right? So what actually happened, and what should we anticipate next? So we were looking at Avalanche. This actually happened pretty bang on, pretty bang on. If I just match the chart and what we saw happening, it was pretty much this part of the market. I just need to make it a bit bigger. So it just matches up, marries up nicely, bang, bang. All right, this is what we said here, bang, and it happened pretty nicely, in the sense of we had this movement to the downside, and it came down as anticipated over here. We did get the movement to the upside, but we've got this, right? So we get, again, we just want to give you a nice clear picture, because this is the power of Fibonacci and Elliott waves. We can see what's likely to occur next. So when we're looking at Avalanche, what we were talking about was this here. When we see this correction over here, we should anticipate this to the downside, and then after a correction, we should get a movement to the upside. Right? It doesn't mean we'll always get the follow through that we're anticipating, but we'll normally get at least the minimum occurring. And again, we can see they happen pretty much bang on. However, with that said, we didn't get the follow through. Like, what do you mean follow through? Well, what we're looking for is, we need to know and understand we don't have control over the markets. We're just speculating on the price action, and we're going with the probabilities. And when we see a particular pattern unfold, like this particular pattern that we saw here, and it unfolded perfectly, A, B, C, and we anticipate new highs being made, like the market really taking off, and we want follow through. We want this to follow through like this. So when it gets here, it just follows through. But what we got was a movement back to the downside. Now, the wave count still holds. However, when there's no follow through and the market trades back into the range, it doesn't invalidate the wave count. It just means that there's less probability that it's going to follow through the way we initially anticipated. It can still do this, and then this kind of forming some type of correction over here. But this is not the high probability outcome right now. What this looks like now to me is, this just looks like a, if I just put this in a micro, ABC, but we've got an intermediate ABC happening. This will make sense in a second. I'm just going to draw this out. This will make more sense in a second. If I just put this like this, is this wave 4 might not be complete, and we might get another movement to the downside. So there's a couple of things. So with Avalanche, what it looked like, and still looks like, is a bullish, very explosive wave 3. It looks like a textbook wave 4, but we haven't had that follow through. And this structure here looks corrective. And after a corrective structure, you should anticipate a movement to the downside. So one thing that most people don't realize is wave A's can actually break down to 3 waves. So we might actually be seeing, potentially, we might actually be seeing something like this. We might be seeing a wave A, a wave B, and a wave C forming, like so. Now, there's a couple of things that we want to take into account. And by the way, if you're brand new to Elliott waves, or you haven't got much experience, do take my free Elliott wave and Fibonacci masterclass, because with Elliott waves, it's probably the most powerful tool at reading the market, especially crypto, because the psychology is so raw, and we can see the psychological mood of the buying and selling behavior. So So we can anticipate what's likely to occur next with very, very high probability. Now, there's a few things that we want to be aware of. So Elliott waves, there's 3 rules and there's also guidelines. And if a rule is invalidated, we just reevaluate. So one of the Elliott wave rules is wave 4 should not trade into the closing range of wave 1. So if this price does close into this range, we just need to reevaluate. And there are a couple of alternative wave counts, but that's not that important right now. What's really important right now is that we're likely to see a movement to the downside of some sort, whether we close into the range or not, before we see a real continuation to the upside. So there's a couple of things I want to do. I'm going to jump into a weekly chart. Top left is where I keep my weekly. And I just want to be aware of the weekly momentum. We can see last week it turned bearish. So the immediate movement should be sideways to down. So there's a great saying in trading, the trend is your friend. Ride it until its end, until it reaches its bend. And momentum indicators can give us a massive clue on where is the trend, then combined with pattern position. Pattern position trumps momentum, but combine the two, and they're both saying the same thing, that makes it a higher probability. So we want to know sideways to down is what we're anticipating. So therefore, that also confirms our thinking with this ABC correction. So therefore, we should get continuation, potentially taking out this low. And if we do go into this range, then we just need to reevaluate the market. But I would like to just wait for that to happen. So the main update with Avalanche is, yes, we got the initial impulse like this that we anticipated, and it went from $68 to nearly $100. So it's almost doubled in price. That's quite significant. And hopefully, if you manage to take advantage of that, you are able to become risk-free and so on and so forth. But the market does what the market's going to do. We don't have control over the market, and we're not here to just forecast. We want practical application of the information that we have available. And right now, we should anticipate this low getting exceeded, possibly this low, and possibly trading into this range. If that occurs, then we just need to reevaluate the market. If you said to me, yeah, but Jagir, what would it likely be? Well, if I was to just do a quick one, what I'd say is the likely wave count at that point. This is the beauty of Elliott wave. You've got the rules and the guidelines that allow you to move with what the market is telling you. What it would look like to me, it would be still a wave 1, still a wave 2, but this here would be the likely wave 3, 4, 5. And then this whole thing over here would be more of a macro degree wave 2 correction, right? And that's basically telling me the psychology of what's likely. Still a correction, so it doesn't make that much of a difference in terms of if it's one wave count or the other, because what tends to happen after the correction either way is a continuation of the former trend, which means all-time new highs. Right? That's the main thing that you want to take away from the Avalanche update, because we don't need to get too caught up in having a perfect wave count all the time. We want practical information that helps us, guides us to make business decisions in a logical manner that's objective and non-emotional, and that we can be consistent with. So if you want to learn how to do this thinking, because it's such a valuable tool to give you an edge in the market, take my free Elliott Wave and Fibonacci Masterclass. It's in the link below. I cover it. You get instant access. It says, show me how. Jagir, show me how. Pop in your email. Bang, you'll get full access. And you have the opportunity at the end as well to buy one of my courses. It's the Elliott Wave Fibonacci course, where it's really, really comprehensive. In fact, let me just show you. I think I've got it open over here. Elliott Wave is broken down into detail. We've got a 90% discount happening right now. I cover everything you need to know. And then the Fibonacci ratios, how to then combine that with the Elliott waves. That is £97 at the moment. It's really, really cheap for what it is. It should be like 1,000. That literally is that much value in it. But what you'll get is you'll get an invite to my private Telegram. But also we do weekend workshops on Saturdays normally, and you get to ask me how to, I can look at some of your coins and do some analysis as well to help you on your journey. So if you like today's content, like, subscribe, hit the bell notification. Let's finish on a quote today. Let's go with, we'll go with chapter. Let me see. Let me double check. Yeah, we'll go with Benjamin Franklin, right? Keeping it real. It's Benjamin Franklin. He or she who is good for making excuses is seldom good for anything else. My experience in life has been the way a person does one thing is how they typically do most things. So I like to just look in the mirror and see what you got control over, and take control over those things, and then execute. You know, the energy that you pour in to do purposeful practice will pay over time. And what I've also realized is most people overestimate what they can do short term, and everyone's in a rush, but they underestimate what they can do long term, the 1 year, the 3 year, 5 years, 10 years, and start to think long term, because winners think long term. And the short term is going to happen anyway. That's just the part of the journey, the milestones, but really get that long term 10-year vision thinking. When you get that clarity, you're not so much in a rush, and you can really learn these important skills that are going to serve you over a long period of time. Like, subscribe, hit the bell notification, take the masterclass, and hopefully I'll see you in one of my live workshops. See you soon.